Friends, I hope and trust that you would have written off information already, because I won't be going back to the trial balance any at all or the notes. So ensure that you have it already. If you don't have it, that'll be your supper. Alright, let's go. Stock of raw materials 1 of 1 2008. How much is that, friends? That is what? 2100, right? Now when you type 2100 right here, add purchases. Purchases how much? Purchases is 37,000 from the purchase of raw material. Raw materials purchase, same thing. Purchase of raw materials is $37,000. So you're gonna have $37,000, and then what we call carriage inwards. Carriage inwards is what? 350, right? Yep. Then you're gonna add up that figure, this plus this plus this, and you get 39,450. Move on here at all. Alright, that's after that. Now let's stock of raw materials 31st of 12 2008. That is 2,400. Remember that in the notes it said that stock of raw materials is 2,400. So you have 2,400. Remember that we also said that stock of finished goods is dealt with in the what? Trading and profit and loss account. Alright, now we're gonna list 2,400 from 39,450. We're gonna do that now. We get what they call, we get our prime costs. If you minus 2,400 from 39,450, we will get 37,050. 37,050. Now we go to something called direct labor. Direct labor, friends. Alright. Direct labor is what? 18,700, I would imagine. Yes? Agree? Agree with me? I hope you do agree with me now. You're gonna ask me where I get that from. Friends? Remember that on the trial balance it says pay direct 18,700, indirect factory indirect 14,500. So direct labor and direct pay is the same thing basically. So you're right, 18,700. And go back for clarity. Cross again. That figure, friends, comes from this. See it right here. Pay direct 18,700. It comes from right there, friends. Alright, I said I wouldn't be going back there, for peace sake I'm going back there. When you add up direct labor and that, you get what we call prime cost, which is, when you add both of them, with a figure of 55,750. 55,750. Now let's work out our factory overhead expenses. General factory expenses. What is that? How much is that, friends? How much is that? 3,100. Yeah, where does this come from? Let us find it right here. Right. Next, lighting. He said that lighting and rent and insurance are to be apportioned 5/6 for a factory and 1/6 for administration. Now we are looking at factory overheads. So we're going to find 5/6 of the amount for lighting, and the amount for lighting is what? Let us look again. The amount for lighting is 750, and if we find 5/6 of 750, friends, we would get a figure of 625, right? You agree with me? Let us work it out. Let us work it out, friends. Let's work it out. Because you might not agree with me, but let us work it out. And my calculator, isn't it? Let's work it out, friends. So we're gonna say 5 divided by 6 times 750 equal 625. So you cannot disagree with me, right? So the figure is 625. It's 5/6, and the next 1/6 will go to automatically go to administration, right? That came from the notes. All right. If you go back to your notes, you will see lighting and rent and insurance are to be apportioned. Factory 5/6, administration 1/6. All right. Now we go to power, which is 1,370, right? Yes. So we go back with the full amount right there. Next thing we do is rent 5/6 again, and the rent was what, friends? Rent was 1,200, something like that. So 5/6, friends. Rent, and in this case you calculate the 5/6, you get 1,000. 5/6 of 1,200 gives you 1,000. Insurance 5/6 again of the total amount of insurance, and you know what is it? We write 350. 5/6 of that amount. 5/6 of what? Of I think it's 420. We give you 350. Now we look at the depreciation of productive machinery, which is 2,800, right? Depreciation of productive and accounting machinery at 10% per annum on cost. So 10% of what? 28,000 is 2,800, right? Yes. So therefore, we use called productive machinery. We are 2,800. Then indirect labor is 14,500. Now we add up all of that and get a figure of 23,745. When we would have done that, friends, we then add this 23,745 to the 55,750, and we get 79,495. 79,495. Let's pause for a bit here. Pause for a bit, friends, and you go back, pause the video, and ensure that you have everything. Alright, let's go again. Now we're gonna add our work in progress, which is as given is 1,350. This is opening work in progress. Then we're going to have this. We're going to add that to that. Now we get a figure of 80,845. 80,845. When you add this and this, you get 80,845. Then let's work in progress straight out of the 12,008. That figure is 1,500. This is what we call closing work in progress. Minus that 1,500 from this, we get a figure of 79,245. This will we call our production cost of goods completed, CD. This will be transferred to the trading profit and loss account at the appropriate time. Now we're going to go down to our trading and profit and loss account immediately. What is the sales figure? Anybody knows? I know. It is $100,000. Less cost of goods sold. Now, I said before that the TP&L is concerned with finished goods. So instead of finished goods, go back to your notes at this time, please. Your note says that stock of finished goods is what? $4,000, right? Yes, I'm on the ball, I guess. Is $4,000. Am I right? Or am I wrong? Yes, I'm sure I'm correct. Stock of finished goods is supposed to be 4,000. No, sorry about that. Stock of finished goods is $4,000 for the closing. This closing stock of finished goods is $4,000. Sorry about that. And the opening stock of finished goods on the trial balance. Go to your trial balance, please. Stock of finished goods on the first of the first is 2008 is what? 1,000. No, it's 3,890. So we type in 3,890 right here. We're going to add production cost of goods completed brought down, which is we carry this figure right here from right here to here. We're going to have 79,345. Alright, when we add both figures right there, we get a figure of 83,235. 83,235. After that, now we're going to subtract the closing stock of finished goods. Let's go back to our notes. Notes at December 31, 2008. Stock of finished goods is what? $4,000. We subtract that 4,000 from the 83,000. When we would have done that, we would get a figure of 79,235. 79,235. Then this is what they call cost of goods sold. But the minus the cost of goods sold, as usual, as you would know already in accounts, that we in the TPN we minus the cost of goods sold from the sales to get to our gross profit. And when we do that now, we get a figure of 20,756. So our gross profit is 20,756. Now we're going to deal with our expenses at this time, my friends. Right, alright. What we have done now, as you can see, I'm going to pause the video at this time for you to look at what happened as it relates to the. Pause the video, watch, see what is going on, watch the figures here. Look on the figures, look at your trial balance again and your other things. Look at them, please, as you go along. Look at them as you go along, please. Look at them. I'm going to pause at this time for you to retrace your steps and understand what we are doing. Reinforcement, guys. Notice now that our expenses in the TPNL has been, we have divided them into three: administration, selling and distribution, and there's something called finance charges as well. Now, first things first, what is administrative staff pay? That comes from where? This administrative staff pay, friends, is 4,400, and that comes from the trial balance. You can have 4,400 right here. Then rent, as we said before, 1/6 of the rent is what? 200? No, it's 200. Yep. Then 1/6 of insurance is what? 70. General expenses 1,340. Lighting 1/6. Lighting, as we did before, 1/6 is 125. And the precision of accounting machinery now is 200. So you notice that the productive machinery goes up here under production overheads, and the accounting machinery goes under administration. Please note that, friends. So add up everything right here. When you add up everything, you get the total for administration expense, which will be 6,335. So you add all these figures right here and get this figure. Next, we go to our selling and distribution expenses. Sales forces pay is what? 3,000, right? Yep, it is 3,000. Commission and sales 1,150. What you do, friends, in an exam like this, you drop the format first, as I have done before, and then you pick out the figures and fill them in as appropriate, and you cannot go wrong. And it's 590 carried out, is 590 carried out goes under selling and distribution expenses. You realize now that this is not the normal, it's a normal TPN, but we have subdivided the expenses into administration, selling and distribution and finance charges. When you add up everything right here, we get a figure of 4,740, which is total selling and distribution. Then finance charges, and the finance charges we have bank charges, which is 230, and discounts allowed, which is 480. Add up both of that, you get 710. Now we add up everything right here. All expenses 6,335, 4740, and 710. You would get 11,785. Then we would subtract this 11,785 from a gross profit and get a net. We would arrive at a net profit of 8,980. So this is our net profit, friends, that we'll use back in the balance sheet. So this is how. Go up again at the top, pause the video, write down information. If you missed out, look at it, pause it, write it down, pause it, write it down, pause it, write it down. Compare, look at the information given on the trial balance, and then see where you got the figures from, and see how it is worked out, friends. I've shown you how to calculate everything. You have nothing to blame if you don't understand, because you should have viewed the video. Thank you very much.